everyone. Welcome back to the deep dive.
Yeah, it's been a wild ride, hasn't it?
It has, especially with all the changes in U.S. trade policy. So that's what we're diving into today, the fallout, the impacts, the whole shebang of the U.S. trade wars. But we're not just going back over old ground. We're really focusing on what's been happening after the U.S. slapped those tariffs on pretty much everyone.
Right, because that's where things get really interesting. We've got some really fascinating expert analyses to dig into, stuff that looks at the initial global reactions. But we're also going deep into hard data, the broader trade landscape, all the way up to March 2025.
Exactly. We want to get a grip on how the world reacted, like right off the bat, and then see how those initial shocks are playing out in the long term, not just in general either. We're going to get specific, looking at different regions, different industries, the whole picture.
And I think one of the things that really jumps out when you start looking at this is just how big a deal these U.S. actions were. The scale, the timing, it was a major shift in policy. And remember, this is affecting pretty much every single country the U.S. trades with. We're not talking about a minor tweak here.
Oh, yeah, this was huge. Think back to early April 2025. Out of the blue, boom, a 10% tariff on goods coming from basically every single one of the U.S.'s trading partners.
Just like that.
But wait, it gets even crazier. About 60 countries, those tariffs were even higher. We're talking up to 50%. Can you imagine the scramble that caused in all those capitals around the world?
Well, sure, you had the U.S. Treasury Secretary, Scott Bessing, trying to tell everyone to stay calm, but...
Easier said than done, right?
Totally. I mean, look at the sources. You can see most countries weren't just going to sit back and act like nothing had changed.
Right, and this is where it gets really interesting, and this is important for everyone listening. The reasons behind these tariffs seem to have changed. I mean, normally you think of trade policies as being tied to alliances, geopolitics, that kind of stuff. But this was different. It was all about trade balances, whether a country had a trade deficit or a surplus with the U.S.
Exactly.
So take Japan, for example,
Yeah.
a major U.S. ally. Right, but they got hit with a 24% tariff. Meanwhile, Iran, not exactly best buddies with the U.S., only got a 10% tariff.
Makes you think, huh?
It totally does, because it means the rules of the game have changed. It's not about traditional alliances anymore. It's about the bottom line,
Yeah.
the balance sheet. And that's a massive shift, and frankly, a pretty scary one when you think about the potential for instability.
Absolutely. It raises some really fundamental questions about how countries are going to engage with each other economically from now on.
All right, so let's see how those initial shockwaves played out. We'll start in Europe. The experts over at the Atlantic Council, they called it a double whammy for the European Union. An economic hit, for sure, but also a political one.
Yeah, and just to put some numbers on that for you, they were estimating a 0.3% hit to GDP growth in the Eurozone over 2 years. That's not insignificant.
Not at all.
But on the political side, it kind of kicked off this whole wave of anxiety about whether the U.S. was really a reliable ally anymore. You had those disputes over Greenland, the disagreements on those digital regulations, even that whole thing where the U.S. temporarily stopped supporting Ukraine. All of that just added to this feeling that things were, well, shaky, to say the least.
Yeah, like the ground was shifting under their feet. And it wasn't just about the U.S. relationship either. For the EU, they've always been big on this rules-based multilateral trade system. They basically built their whole economic strategy on it. So these tariffs, it felt like an attack on that whole system.
Right, like someone was trying to tear down the whole house.
Exactly. So, of course, the EU had to figure out how to respond. And as always, with 27 different countries trying to agree on something, it wasn't exactly smooth sailing. I mean, they all agreed that these tariffs were bad news, but some countries were more gung-ho about hitting back right away than others.
Yeah, you had some real differences in how fast they wanted to go. It's worth noting, though, that even Italy, which had been pretty friendly with the previous U.S. administration, they weren't happy about this either.
Interesting. So what options were on the table?
Well, there was a lot of talk about this thing they call the anti-coercion instrument. Sounds pretty intense, right?
That does. What is that exactly?
Think of it like this. It's a tool the European Commission can use to fight back against what they see as unfair economic pressure.
Yeah.
And it's pretty powerful. They can use it to put restrictions on all kinds of things. Regulations, government contracts, investment, even intellectual property rights. It's like their nuclear option.
Wow. Okay, so they had that in their back pocket. Did they use it?
Not right away. I mean, the experts we were looking at, they thought that was unlikely. It's a pretty big escalation, and getting all the EU member states to agree on something like that takes time.
Makes sense. So what was their main strategy?
Well, first and foremost, they wanted to talk. Negotiation was their top priority. But they are also starting to look at other ways to protect themselves, like diversifying their trade, finding new partners in other parts of the world. And they were also talking about strengthening their own internal market, the European single market.
So basically, hedging their bets, making themselves less reliant on the U.S.
Exactly.
So it sounds like there was a lot of tension, but was there any common ground at all?
Well, there's this interesting tidbit. Even though she was criticizing the tariffs, Ursula von der Leyen, the European Commission president, she actually acknowledged some of the U.S. concerns, things like those non-market practices, like state-owned businesses that don't really play by the usual rules, and those worries about overcapacity, unfair subsidies, intellectual property theft. So there was a glimmer of hope there, maybe, for some kind of future cooperation on those specific issues.
So a little sliver of a silver lining, maybe. What about the immediate aftermath? How did the EU respond in those first few days?
Well, there was a lot of tough talk, for sure, especially from leaders like Macron in France. He actually suggested that EU businesses should stop investing in the U.S. And we even heard some surprisingly strong words from Maloney in Italy and Martin in Ireland. But like we said, any concrete actions, anything with teeth, that was probably weeks away. They had to get everyone on board and then make it all official. So that's the EU. Let's hop over to Asia now. The situation in China, that's a whole different story.
Yeah, the experts were saying that President Xi Jinping had been preparing for something like this for years. Their dual circulation strategy. The idea is to make China less dependent on other countries, strengthen their domestic economy, rely more on themselves. So when something like this trade war hits, they're better able to weather the storm.
Right. And they've also been working on this long game of building up those supply chain dependencies, basically making other countries reliant on China for all those essential goods and raw materials. And let's not forget, they've been getting more and more assertive about using their economic clout, putting pressure on countries that depend on them.
Okay, so they had some defenses in place, but how bad were the projections? Did those preparations actually help?
Well, even with all that, the initial estimates were still pretty rough. They were talking about China's economic growth slowing down, anywhere from 1% to 2.5%. And get this, exports to the U.S., they thought those could plummet by up to 80%.
80%? That's a massive hit.
It is. And of course, China wasn't just going to take it lying down. They announced their own tariffs on American goods, so that just added another layer of complexity to the whole mess.
So a classic tit-for-tat situation.
Exactly. Now, the Chinese government, they do have some tools to try and soften the blow, like lowering interest rates, boosting government spending. But let's be real, the potential damage here was huge. It was going to be really tough to completely offset it.
Right. It's like trying to plug a leak in a dam with a Band-Aid.
Kinda, yeah.
Hmm.
And then you had reports that big U.S. retailers like Walmart, they were basically telling their Chinese suppliers to cut prices to absorb the cost of these tariffs. So even more pressure.
Ouch. Talk about being squeezed from both sides.
And it didn't stop there. Those exemptions that used to allow Chinese online retailers like Shein and Temu to sell cheap goods in the U.S., gone. Poof.
Wow, they really closed those loopholes, didn't they?
They did. And high-end manufacturers in China, the ones making parts for electric vehicles, they were starting to feel the pinch too. Job losses, deflation getting worse. It was a whole domino effect. And to top it all off, China filed a lawsuit at the World Trade Organization, challenging the legality of these U.S. tariffs.
So they were fighting back on multiple fronts. Okay, so we've seen Europe, we've seen China. What about India? Where did they fit into all of this?
Now, this is where things get kind of interesting. You could almost say that this whole global trade shakeup created an opportunity for India.
Really? How so?
Well, there had already been talks going on between India, led by Prime Minister Modi, and the U.S. under President Trump about a potential trade deal. These talks have been happening since February 2025. But with all these new tariffs flying around, suddenly everyone was paying a lot more attention.
I see. So this was a chance for India to step in and become a bigger player in the U.S. market.
Exactly. A potential game changer in terms of global trade alliances.
So what were they focusing on in these talks? What were the sticking points?
Well, a lot of it was about those pesky non-tariff barriers. Different technical standards, those food safety regulations, that sort of thing. And then there were the rules areas, which cover stuff like intellectual property rights.
Ah, the devil's in the details.
Always. But their goal was to get at least an interim agreement in place pretty quickly, maybe by fall 2025, and then hammer out a bigger, more comprehensive deal over the next couple of years.
So kind of a two-phase approach. It's amazing to think that all this global trade tension could actually end up boosting the U.S.-India relationship? I mean, that wouldn't have seemed very likely a few years ago.
It's definitely a possibility, but we have to be realistic. Trade deals are complicated, there can always be delays, and of course, how the global economy does overall, that's going to have a big impact on whether they can actually pull this off.
Right, so many moving parts. Okay, let's move on to Latin America. What was the initial reaction there?
Well, for most of the countries in the region, it seems like the immediate hit wasn't as bad as it could have been.
Really? Why not?
Well, a couple of things. First off, for most of Latin America, the U.S. actually has a trade surplus. They buy more from those countries than they sell to them. And remember how those new tariffs were calculated. They took that balance into account. So with a few exceptions, like Guyana, Venezuela, and Nicaragua, most of Latin America was only facing that baseline 10% tariff.
Ah, so they got a bit of a break there.
They did. But that doesn't mean everyone was happy. Brazil, for example, they had some specific concerns.
Like what?
Well, for one, the U.S. had been grumbling about Brazil's tariffs on ethanol for a while. That was an ongoing point of contention. And then there's the issue of steel and aluminum. Those are big exports for Brazil in 2024, and now they were facing those new U.S. tariffs, so that was a real worry for them.
So even if the initial hit wasn't as bad, there were still some definite pressure points.
Absolutely.
Okay, let's shift gears again, this time to Africa. How did things look over there?
Well, overall, the mood was pretty anxious, especially for those countries that were part of the African Growth and Opportunity Act, AGOA.
AGOA, right. Remind us what that is again.
It's basically a deal that gives certain African countries duty-free access to the U.S. market for some of their products. But now, with these new tariffs, that benefit was basically wiped out. So for countries like Lesotho, Kenya, and Madagascar, which rely heavily on exports like textiles and agricultural goods, this was a major blow.
Yeah, I can imagine. Those industries are often big employers, right?
Exactly. So this was a threat to jobs, to economic stability, the whole nine yards. And then you had South Africa. They were pretty vocal about their concerns.
What were they unhappy about?
Well, first off, they didn't agree with the way the U.S. had calculated the tariffs. They ended up with a 30% rate, even though the U.S. is their second biggest trading partner. So they were questioning the methodology. And then on a practical level, they started making plans to diversify their exports, find new markets so they wouldn't be so dependent on the U.S.
So basically, trying to reduce their exposure, make themselves less vulnerable.
Exactly. And to make matters worse, the U.S. had already decided to freeze financial assistance to South Africa back in February 2025. So that just added to the pressure.
Not a good time to be on a receiving end of that, for sure. What about other countries in Africa? Any particularly hard-hit cases?
Well, Madagascar was in a really tough spot. They were looking at a whopping 47% tariff, which was a huge threat to their vanilla and textile industries. And those are really important for them, especially for exports to the U.S. We're talking 70% of their vanilla exports and 40% of their textile exports go to the U.S. So they were really scrambling, trying to find a way to minimize the damage. There were some diplomatic efforts going on behind the scenes, trying to work something out.
So a lot of uncertainty and anxiety in Africa. Okay, last stop on our world tour, the Middle East. How did these tariffs impact that region?
Well, for a country like Iraq, the impact was expected to be more indirect. It's not like they were facing these huge tariffs directly, but they were still going to feel the effects, mostly through lower oil prices.
Right, because when the global economy slows down, demand for oil drops and prices go down.
Exactly. So even though they weren't the primary target, they were still going to feel the ripple effects.
It's amazing how interconnected everything is, isn't it? You can't just isolate one part of the global economy and expect it not to have knock-on effects elsewhere.
It's like a giant spider web, you tug on one strand and the whole thing vibrates.
Okay, so we've heard about the immediate reactions from around the world, but let's zoom out a little. I want to get a sense of the broader global trade landscape, the big picture leading up to this new wave of tariffs.
Well, we've got some data from UNCTAD that gives us a good snapshot of where things stood in March 2025. And it's pretty revealing.
Okay, let's have it. What were the key takeaways?
Well, first off, global trade had actually grown in 2024, about 3.7%, which isn't bad. But here's the thing. It had started to slow down towards the end of the year. Like in the fourth quarter, trading goods barely budged, and even though services kept growing, it wasn't at the same pace.
So a bit of a loss of momentum.
Exactly. But even with that slowdown, 2024 saw a record high in terms of the total value of global trade. We're talking about $33 trillion.
Wow, that's a huge number. What was driving that?
Well, the services trade was booming. It grew by a massive 9%. Goods trade was a bit more modest, about 2%. And interestingly, inflation in traded goods was pretty much non-existent.
So a mixed bag, but still some positive signs. What about the different types of economies? Were there any noticeable trends there?
Yeah, one thing that really stood out was that developing countries were generally outpacing developed countries in terms of trade growth throughout 2024.
Interesting. Why do you think that was?
Well, a big part of it was this strong trade between developing countries themselves, what they call South-South trade. And that was particularly true in East and South Asia.
So those regions were really driving the growth.
They were. But even within developing economies, the growth in goods trade slowed down in the last quarter of 2024. Services, though, they kept on trucking.
Okay, so some variation there. Anything else that jumped out at you from the UNC TAD data?
Yeah, there was this interesting thing about those upcoming U.S. tariffs. It seems like a lot of businesses were anticipating them and started shipping stuff early.
Yeah.
Like they were trying to get ahead of the game, move their goods before the tariffs kicked in. It's called front loading.
Ah, so they were trying to beat the clock.
Exactly. And another thing that was pretty clear was the rise of protectionism around the world. More and more countries were putting up trade barriers, and not just the usual tariffs. They were linking trade to all sorts of other things like national security, environmental goals, you name it.
So trade was becoming more political, less about pure economics.
Right. And that had some pretty big implications for how global supply chains work. Companies were starting to rethink where they manufacture and source their goods, trying to navigate this new, more complicated trade landscape.
Yeah, it's like a giant game of chess with everyone trying to anticipate the next move.
Exactly. And then there was the danger of retaliation. One country puts up tariffs and then another country retaliates and it just escalates. And that can end up hurting everyone, even countries that weren't initially involved.
So it's a really delicate balance.
It is. And on top of all that, you had governments getting more involved in the economy. More subsidies, more of those inward-looking industrial policies, especially for things like green technology. And while those might be good goals in themselves, they can also make it harder for companies to trade freely.
Right, because it creates an uneven playing field.
Exactly.
Okay, so a lot of complexity and some potential trouble spots. Let's drill down a little further. What were the trade trends looking like for the major economies?
Well, in the fourth quarter of 2024, it was a bit of a mixed bag. China and India were both increasing their exports, but in the U.S., imports were up while exports were down.
So the U.S. was buying more from other countries, but selling less.
Right. And then you had Japan, Russia, South Africa, and the EU. They were all seeing their imports shrink. But over in the services trade, China and India were still going strong.
So again, some winners and some losers. What about on a regional level?
Well, like we were saying before, developing countries as a group were outperforming developed countries in the fourth quarter of 2024, both overall and in terms of those quarter-to-quarter changes. In fact, developed countries actually saw their total trade shrink.
Wow, that's a pretty stark contrast.
It is. And the growth in South-South trade, that was still going strong. East Asia was a big driver there. But the growth in goods trade among developing regions was pretty uneven.
Okay, so some regions were doing better than others. What about those trade imbalances we were talking about earlier? Were those still a problem?
Oh, yeah, definitely.
Yeah.
UNC TAD data showed that those bilateral trade imbalances were not only persisting, but actually getting bigger in many cases. And that U.S.-China trade deficit, still a major issue.
So no easy solutions there. What about when we look at specific industries? How are things playing out on that level?
Well, in 2024, office equipment and pharmaceuticals were doing really well, way above average growth. But the energy sector, that was lagging behind.
Interesting. What about in that fourth quarter specifically?
The strongest sectors were agri-food, communication equipment, precision instruments, and transport equipment. But apparel and extractive industries, those were shrinking.
So lots of variation across different industries. Now, one thing we haven't talked much about yet is tariffs. How are those impacting different sectors?
Right. Well, agricultural exports from developing countries, they were facing some pretty hefty tariffs, like around 20% on average. And while those regional trade agreements can help, they're not a complete solution. They don't cover everything.
Right. And I remember you mentioning that some regions have higher tariffs than others.
Yeah, Africa, South Asia, and East Asia tend to have higher tariffs on agricultural goods than Latin America. And then you've got developed countries, they might have low average tariffs, but they often have these tariff peaks for specific sensitive products.
Tariff peaks. Remind me what that means again.
It's basically when a particular product faces a much higher tariff than the average.
Yeah.
Like they're trying to protect their domestic industries from competition.
Ah, so a bit of a shield.
Exactly.
What about in manufacturing? How are tariffs playing out there?
Well, tariffs in manufacturing had actually gone down a bit between 2012 and 2023 thanks to various trade liberalization efforts, but they were still pretty high in places like South Asia and Africa.
And what about textiles and apparel? Those are big industries for a lot of developing countries.
Yeah, and they were still facing some pretty high tariffs. And get this, there were actually more restrictions on things like office machinery because of those retaliatory tariffs between the US and China.
So that tit for tat was having a ripple effect.
It was.
Interesting. What about raw materials, things like fuels and minerals? Were those heavily taxed?
Not really. They tend to have the lowest tariffs. And those trade agreements don't make much difference there because the tariffs are already so low.
I see. So it's really the processed goods, the finished products that are facing the biggest hurdles.
Exactly. And there's this thing called tariff escalation, which makes it even harder for countries that produce raw materials to move up the value chain.
Tariff escalation. What's that?
It's when you have higher tariffs on finished goods than on the raw materials they're made from. So if you're a country that mainly exports raw materials, it discourages you from developing your own manufacturing industries because your higher value-added products would face those higher tariffs.
Ah, so it kind of keeps you stuck in that raw material exporter role.
It can, yeah. Now, one last thing about tariffs. You know the World Trade Organization, the WTO? They set limits on how high tariffs can be. Those are called bound tariffs. But in reality, a lot of countries apply lower tariffs than that. Those are the most favored nation rates.
Right, I remember you mentioning that before.
Well, that difference between the bound rate and the actual rate, it gives countries some wiggle room to raise tariffs if they need to. It's like they have this tariff water they can draw on. But for developing countries, that flexibility is usually pretty limited because their actual rates are already close to the maximum. And of course, those trade agreements can also tie their hands. They can't just raise tariffs willy-nilly on their partners within those agreements.
So it's a complex system with a lot of constraints. Okay, we've covered a lot of ground here, but now I want to talk about the big question, the one that's probably on everyone's mind. What are the potential wider economic impacts of all of this?
Well, the most immediate impact, as we've been talking about, is the disruption of those global supply chains.
Mm.
That's going to lead to less trade overall and higher costs for companies, which often means higher prices for consumers.
So we're all going to feel it in our wallets.
Probably, yeah. And then there's the uncertainty factor. When you have these trade wars going on, it makes businesses hesitant to invest, and consumers get more cautious about spending. So the whole global economy becomes more risk-averse, more hesitant.
Right, everyone's waiting to see what happens next.
Exactly. And then there's the bigger picture, the potential reshaping of the global economic map. We might see countries focusing more on their own domestic industries or scrambling to find new trading partners to diversify their economies. That could shift the balance of power, change which countries have the advantage in certain industries. And we can't forget about the media and public opinion. They play a huge role in how these trade conflicts unfold and what impact they have.
So it's not just about economics, it's about politics and perception, too.
Absolutely. And here's an interesting twist. Some experts think that these very trade wars could actually push countries towards more cooperation in the long run.
Really? How so?
Well, they might realize that it's in their best interest to work together to mitigate the negative impacts of these conflicts. So we might see more multilateral agreements, more regional trade deals, as countries try to find alternative ways to do business with each other.
So maybe some good can come out of all this bad.
Maybe. It's definitely possible.
Okay, so a lot of uncertainty, a lot of potential for disruption. What are the experts saying about the specific economic outlook?
Well, Alliance Global Investors, they were pretty pessimistic. They said that these tariffs could shave at least 1% off global output. And if things escalate further, we could even be looking at a recession.
A recession? That's not good.
Not at all. And they're also expecting more volatility in the financial markets. People are going to be moving their money into safer assets, like gold and U.S. government bonds. And they think the U.S. economy might actually be one of the hardest hit by all of this.
Interesting. So the one who started the fight might end up being the one who gets hurt the most.
It's definitely a possibility.
What about how businesses are reacting? Are there any insights into what companies are doing on the ground?
Well, KPMG Canada did this really interesting poll of business leaders, and it gives us a glimpse into what's happening. A huge majority of them said they were already diverting their goods to avoid those tariffs. And a lot of them were also reconfiguring their supply chains.
So they're adapting, trying to find workarounds.
Exactly. And a pretty significant chunk of them were also looking at moving their production out of China, because of the tariffs and also because of concerns about things like forced labor.
Right, so a lot of companies are reassessing their China strategies.
They are. And a surprisingly high number of those Canadian businesses thought that the U.S.-China tariffs would hurt them. And they even thought that the U.S. might end up putting tariffs on goods from the EU, too. So there was a lot of apprehension, a lot of uncertainty about what the future holds, and their biggest priority, build a more resilient supply chains, ones that can adapt to these changes.
So they're trying to be more agile, less vulnerable to disruptions.
Exactly. And a lot of them actually wanted Canada to retaliate with its own tariffs. But there was also this realization that switching to new suppliers, ones they didn't know as well, could create new risks.
So it's a trade-off. You gain some flexibility, but you might also be introducing new unknowns.
Right. And that just highlights the importance of risk management and contingency planning in this kind of environment. You had to be thinking ahead, anticipating the what-ifs.
Okay, so we've heard from the experts, we've heard from businesses. What about the countries themselves? How are they reacting to all of this?
Well, BNN and Bloomberg had this analysis that said the U.S. might actually be the biggest loser in the financial markets because of these tariffs. U.S. stock futures took a hit, and the U.S. dollar dropped.
So the markets were spooked.
Definitely. And while the immediate impact on other markets wasn't as bad, it did raise the question of whether international investors might start to lose confidence in the U.S. Maybe they'll start selling off U.S. assets, looking for safer havens. And the U.S. dollar was actually heading for its worst day in over 2 years.
So not a good look for the U.S. economy.
Not at all.
What about the reactions from specific countries? Any notable statements?
Oh, yeah, definitely. South Africa was pretty vocal. They publicly questioned those U.S. tariff calculations and said they were going to diversify their exports. And the China Passenger Car Association warned that these tariffs would probably push up car prices around the world.
So consumers are going to feel the pinch there.
They are. And Chinese industry groups were even more critical. They basically said that these U.S. tariffs had thrown the whole international trade system into disarray.
So they saw it as a real attack on the established order.
They did. And then you had Vietnam. They expressed disappointment and said these tariffs didn't reflect the supposedly strong relationship between Vietnam and the U.S. And Taiwan's president, she called the tariffs unreasonable and promised to help the industries that were going to be hit hardest.
So a lot of pushback, a lot of anger.
Definitely. And there was even talk that these U.S. tariffs might actually speed up the trade deal negotiations between the Mercosur bloc in South America and the EU.
So some potential unintended consequences there.
Yeah, it's like a chain reaction. You can never predict exactly how things are going to play out.
Okay, so lots of short-term reactions, but what about the longer-term impacts, especially on things like sustainable development?
Well, there was this paper that looked specifically at the U.S.-China trade war, and they argued that these kind of conflicts can be really harmful to developing economies.
How so?
Well, they said it could make existing environmental problems worse, like deforestation and desertification. And they highlighted South Asia as being especially vulnerable.
Why South Asia specifically?
Well, they're already facing a lot of environmental challenges,
Mhm.
and they're also heavily reliant on trade. So these disruptions can really hit them hard.
Right, it's like a double whammy.
Exactly. And then there's the whole historical context of developed countries exploiting developing countries' resources and concerns about China's debt trap diplomacy in various parts of the world.
Debt trap diplomacy. Remind me what that is.
It's basically when China lends money to developing countries for infrastructure projects, but those countries end up heavily indebted and beholden to China.
Ah, so it's a way for China to exert influence.
It can be, yeah. And the paper also talked about how the trade war could impact industrial production in South America, like in Brazil, and even potentially threaten the Amazon rainforest.
The Amazon rainforest. How so?
Well, they argued that the economic pressure from the trade war could drive changes in land use, leading to more deforestation.
So it's a knock-on effect. The economic pressures can lead to environmental damage.
Exactly. And
Yeah.
then you have African countries caught in the middle. They need that Chinese aid and investment, but they're also vulnerable to the negative effects of these trade disruptions.
So they're in a tough spot.
They are. But the paper did point out that some developing countries might actually benefit from the trade war. Like they might be able to sell more agricultural goods to the U.S., for example.
So some potential winners and losers.
Yeah. Always. And they gave some specific examples from South Asia, like Nepal increasing trade with China, Bhutan maybe shifting its economic reliance, the Maldives reconsidering some of those Chinese projects, and India potentially exporting more to the U.S.
So a mixed bag of impacts, some positives, some negatives.
Exactly. It's a really complex picture.
But we've certainly covered a lot of ground today.
Ah,
Any final thoughts before we wrap things up?
well, it's pretty clear that these U.S. tariffs have created a lot of uncertainty and upheaval in the global economy. The interconnectedness of everything means that these kinds of actions have ripple effects far and wide.
Absolutely. And it's a very fluid situation. Things are changing all the time. We're likely to see more retaliation, more negotiations, and more shifts.
To all of you listening, thank you so much for joining us on this deep dive. We hope you found it as interesting and thought-provoking as we did. As always, keep exploring, keep listening, and keep your minds open to all the possibilities.